Dear friends, welcome to weekly view on markets. This week was marked by consolidation in the markets. Nifty Bank and mid cap index traded in a narrow range. They went up by less than 0.5%. Whereas small cap index outperformed the market in this week also. There was RBI meeting this week in which they have not raised interest rates. This is good for the market, and markets are set to go higher in coming weeks. Let us look at performance of indices during this week. Nifty has closed at 18,563. It has gone up just by 30 points during this week, gained 0.16%. Bank Nifty closed at 43,989. It has gained about 51 points, gain of 0.12% for the week. Mid cap index closed at 34,153 with a gain of 186 points and recorded a gain of 0.55%. Small cap index outperformed the market. It has gained 121 points, closed at 10,442, gained 1.17% during this week. India VIX has remained stable at 11.12 during this week. Now let us look at different sectors. Infrastructure sector, auto sector, energy sector, realty sector, manufacturing, commodity sectors gained about 1.1 to 1.86% during this week. Information technology sectors, that is IT sector, lost about 3.32%. PSU Bank lost about 1.4%. FMCG lost about 1.2%. Energy sector lost about 1.18%. Media stocks lost about 1.18%. So, remaining all sectors were flat during this week. This is the daily chart of Nifty. We can see that Nifty is trading in a uptrending channel. So, by looking at this channel, I will be having bearish view when Nifty breaks the lower end of the channel. So Nifty has got good support at 18,500 and Nifty has got resistance at around 18,800 levels. So ultimately, by looking at various parameters, I expect Nifty to continue to trade in this upward trending channel and proceed towards 18,800 coming days. This is a chart of Nifty mid cap index. If we look at the chart, the Nifty mid cap index has given a sharp rally from 29,500 to 34,100, and after such a sharp continuous rally, I expect mid cap index to consolidate for a few more days. It is a small cap index. The small cap index has given a rally and it consolidated in the range of 9,800 to 10,000 level for about 2 weeks. After that, it has started a rally, and I think there is still scope for small cap index to go up. So we can expect outperformance in small cap index in coming days as well. This is a chart of Bank Nifty index. Bank Nifty index is also trading in a channel, and the upper end of the channel is at around 44,200 levels, and the lower end of the channel is at around 42,900. Whenever Bank Nifty is coming down to these 42,900 levels, traders and investors should try to buy. Whenever it is touching 44,000 level, traders should book their profit. Investors should continue to hold bank stocks. So I have very positive view on banking sector for next 2 years. When we discuss fundamentals, I will explain why I have positive view on the banking sector. PMI services index has come out during this week. It has come at 61.2 for the month of May. It was at a peak of 62 in the month of April, though it has come down slightly, but it is not a cause for worry. 61.2 is a very good indicator. So it still shows that service sector in the economy is in the expansion mode. During this week, monetary policy committee meeting was held, and as I had been telling that inflation is under control, and RBI has also stated that inflation is tending to come down. They have not raised interest rates during this MPC committee meeting, and the stance they have maintained withdrawal of accommodation. This is a good support for the markets, as when interest rates are stable or in future they may come down. So in expectations of that, the markets are upbeat, and market is likely to go to higher levels as the stable interest rate, or when the inflation and interest rate starts coming down, the corporate earnings and profits will go up. That is the reason market is very upbeat at this point of time. RBI has projected GDP growth of 6.5% for the current financial year, that is 2023 and 24. They have maintained this growth rate. RBI forex reserve is at $595 billion for the end of this week. USD INR rate is at 82.46. Dollar index is also stable at 103.55. Gold price is at 60,550 for 10 grams. Gold price is also stable for past few weeks. Crude price is stable between 70 to $76. This is very good for Indian economy. Crude price is at 75.04 barrel. FIIs continuously have been buying. This week they have bought 973 crores, and DIIs also have bought 2,917 crores during this week. Now, since Nifty and all other indices have gone off, I have looked at the valuation of the market. Nifty is trading at 20.92 historical PE. Mid cap index is trading at 23.35 historical PE. Small cap index is 18.92. And a surprise is that despite sharp run up in Bank Nifty, it is trading at 16.41 historical PE. So if I factor in a earnings growth of around 15% for the current financial year, the forward PE of different indices are very much within a fair value zone. That is why we see that any correction in the market is being bought by institutional investors like FIIs and DIIs. They understand the valuation of the markets, and they are using the dips to buy into the markets. So investors should look at quality stocks, and they should use, if there is a dip for 2 3 days, that is a buying opportunity. Despite sharp run up in the markets, valuations have not gone up considerably. Good earnings of the companies in the last quarter has helped the markets to keep a check on the valuations. Even though we have seen run up, the valuations have not run up because the earnings have improved. When the earnings improves, it will keep a check on the P value because earnings per share will go up. Nifty is expected to keep its uptrend by looking at technical charts and also on the fundamental factors. Nifty is expected to scale higher levels, and a few days of correction and consolidation is quite normal in the market. There is no cause for any panic in the market. These small corrections should be used to pick up good quality stocks. Investors have to be patient and they should not panic. Investors will get rewarded by their patience. They will get very good returns in next 2 to 3 years time. SIP investors, mutual fund investors should also be patient and remain invested. So they will get very good returns in next 2 to 3 years. So this is all for this week. So we'll meet again next week. If you like my video, please subscribe to my channel, like my video, share with your friends, and you can ask your questions which I will reply. We'll meet again next week. Thank you.